Hello everyone, and welcome. In early 2025, a relatively new name in the AI world, DeepSeek AI, sent ripples through the tech stock market with a groundbreaking announcement about their cost-efficient AI models. We saw companies like Nvidia experience significant stock price fluctuations. But what about Bitcoin? Did this AI revelation, originating from the tech sector, have a direct impact on the world's leading cryptocurrency? Today, we're going to explore the connection, or lack thereof, between DeepSeek's moment in the spotlight and Bitcoin's price movements. Get ready to understand the subtle forces that link, or separate, these cutting-edge digital realms. 1. Recap. What was the DeepSeek effect in tech? First, a quick refresher on why DeepSeek made headlines. DeepSeek's breakthrough, DeepSeek AI, a Chinese AI research company, revealed that they had developed large language models, LLMs, that could match the performance of industry leaders like GPT-4, but at a significantly lower training cost, reportedly under $6 million, and with much greater operational efficiency. They leveraged techniques like the mixture of experts, MO, architecture, which reduces the need for constant, massive computing power. Impact on tech stocks. This news caused a substantial, albeit temporary, shockwave in the tech stock market. Companies heavily invested in high-end AI hardware, particularly Nvidia, saw their stock prices drop sharply, with Nvidia experiencing a record single-day loss of nearly $593 billion in market cap on January 28, 2025. The fear was that cheaper, more efficient AI could reduce the demand for extremely expensive AI chips. Quick rebound. However, the tech market quickly re-evaluated, and many of these stocks, including Nvidia, recovered much of their losses soon after, indicating that the initial reaction was an overcorrection. So, the DeepSeek effect was primarily a story of efficiency, cost, and a re-evaluation of the AI hardware market. 2. Bitcoin's independence, different drivers. Now, let's turn our attention to Bitcoin. Is its price directly influenced by the fortunes of individual tech companies or specific AI model breakthroughs? Macroeconomic influences. Bitcoin's price is primarily driven by broader macroeconomic factors. Think about global interest rates set by central banks, inflation data, geopolitical events, and the overall sentiment around risk assets. When interest rates are high or there's economic uncertainty, investors might pull back from riskier assets like Bitcoin. Halving cycles. A major unique driver for Bitcoin is its pre-programmed halving events. The most recent halving occurred in April 2024, reducing the supply of new Bitcoins entering the market. Historically, these events have been followed by significant bull runs due to supply-demand dynamics. Spot Bitcoin ETFs. The approval and adoption of spot Bitcoin exchange-traded funds, ETFs, in major markets have been a monumental driver. These ETFs have opened the door for massive institutional and traditional investor capital to flow into Bitcoin, greatly impacting demand. Regulatory landscape. Clearer regulatory frameworks or broader adoption by governments and major corporations can boost confidence and drive price, while bans or strict regulations can cause fear. Network health and development. The underlying health of the Bitcoin network, hash rate, security, ongoing development like the Lightning Network, also plays a role in its long-term viability and perceived value. These are the primary forces that sway Bitcoin, and they operate on a different scale than a single AI model's efficiency improvements. 3. The indirect connection, sentiment and risk appetite. While there's no direct, DeepSeek to Bitcoin pipeline, there can be indirect connections through broader market sentiment. General tech sentiment. If a major tech announcement, like DeepSeek's, causes a significant downturn in the broader tech stock market, it can sometimes spill over into other risk-on assets, including cryptocurrencies. Investors might simply become more risk-averse across the board. AI hype versus crypto hype. Both AI and crypto often fall under the disruptive technology umbrella. Periods of intense hype or caution in one sector can subtly influence the other, as investors might shift capital between these growth narratives. However, it's typically a minor effect compared to the core drivers. No fundamental link. Crucially, DeepSeek's AI model advancements fundamentally relate to the cost and efficiency of AI training and deployment. They do not directly impact Bitcoin's scarcity, its decentralized network, its monetary policy, like the halving, or its role as a digital store of value. Bitcoin doesn't rely on expensive AI chips to function or grow. Therefore, any impact from DeepSeek on Bitcoin would likely be more of a ripple effect from general tech market sentiment rather than a direct, fundamental correlation. 4. Conclusion: a separate path. So, did DeepSeek's announcement cause a panic for Bitcoin? No direct panic. The evidence suggests no direct or significant panic for Bitcoin stemming from the DeepSeek AI revelation. Bitcoin's price movements around January 2025 were far more influenced by the ongoing inflows into Bitcoin ETFs, the post-halving anticipation, and broader macroeconomic factors, rather than a specific AI development. Divergent drivers: while both AI and crypto are part of the broader tech innovation landscape, their primary value propositions and underlying market drivers are distinct. A breakthrough in AI efficiency doesn't fundamentally alter Bitcoin's digital scarcity or its role as a decentralized monetary network. Market maturity: as both the AI and crypto markets mature, they are increasingly defined by their own unique fundamentals, making them less susceptible to every specific event in a related, but separate, sector. In essence, while the DeepSeek story was a big deal for the AI hardware sector, Bitcoin was marching to the beat of its own drum. Outro. What's your take? Do you see a stronger connection between AI and crypto, or do you think they're largely independent? Share your thoughts and questions in the comments below. Don't forget to hit that like button, share this video with anyone interested in AI or Bitcoin, and subscribe to our channel for more insights into the technologies shaping our world. Thanks for watching.